We're on. Morning, mate. How you going?
Morning. Very well. How are you?
Yeah, good. Thanks. Good. Mate, looks like a pretty strong Thursday for the market today, with a strong lead from the Dow future, or from our futures.
Yeah, SPY's up 70 odd points. Bit of a move in oil again overnight, and nice pop in gold as well. It's had a pretty strong week so far.
Yeah, BHP and Rio also had pretty strong nights, so that might be a bit of a follow-on from yesterday. They both rallied hard.
Yeah, playing catch up with that copper price, I think.
Yeah, definitely. A couple of topical things this morning. We had the Macquarie's AGM, and the CEO, who's been there for about 8 or 9 years, has decided to resign.
Yeah, it'd be really interesting to see how the market takes it. Yeah, she's been fantastic over a period there, so be very interesting.
I think it's been a very rewarding posting for her as well. She's got a very large chunk of Macquarie stock on the register, so good on her.
Yes. And the other thing at the moment, we've got US earnings underway. From all reports, they've been better than expected. I think earnings year over year are over 25% across the S&P. So, yeah, pretty strong earnings there, and some pretty high CapEx numbers coming out of some of these hyperscalers. I think Google announced this morning that they're planning to spend 200 billion next year. So,
and CapEx, wow, amazing, isn't it? Yeah,
incredible.
Well, let's get into it. So we're going to talk about Fortescue to start us off.
Yes. I'll just share my screen. Yeah, so Fortescue's one we've been watching for a while. It does tend to be range bound a little bit. Most broker consensus targets are around that $20 mark. And the last 12 months, it's really traded between that $17 to $23 range. So it is getting on the lower end of where it's been. And the price action in the stock has been relatively weak compared to the other miners, but I think you are getting fairly well compensated with the put premium if you were looking to sell cash covered puts. So the implied vol premium is about 45% over its average at the moment. So you are getting rewarded for taking on that risk. So if you jumped in for the 20th of August expiry, selling the $18 put, I think you're receiving around 35 to 40 cents, which stacks up pretty well. So your average entry price would be around that $17.60 range, which long term I think is pretty solid for Fortescue.
Yeah, definitely attractive price, and the yield's still pretty good. I think still certainly up in I think around 6% for Fortescue, so still a great yield. Just need to see iron ore pop a little bit. I think that's probably the only thing holding it back in my book.
Yeah, iron ore's been really, really stable compared to all the other commodities. So I think that dividend will certainly hang in there.
Yeah, excellent. Righto, and you're going to mention something just on the gold sector?
Yeah, gold, it's had a rough few months, but it's certainly turned, I think this week it's starting to pop and look a little bit better from being the absolute market darling that it was in 2025. It really got a little bit crowded towards February, March this year. But I do think it's starting to look a little bit better. So a couple of gold names I'm watching, probably wouldn't be entering just yet, especially after the last couple of sessions. They've been really strong. Northern Star is probably the most liquid way to play it in the option space. Evolution. And then there's actually a physical gold ETF that has options on it now, which is the GOLD ETF. So that's one you could put on your watch list, and yeah, potentially look for an exit. Maybe on a dip, you could look to sell some cash covered puts.
Yeah, sounds like a great idea. Right, I thought I'd just mention Origin, which is a stock we've talked about before in the videos. Has been pretty good value. Target's around $11.35. It got sold off yesterday on a bit of a data leak matter. They were apparently hacked, and I think around 2 million customers had some sort of data taken. Well, that's the threat anyway. I think many of these stocks, when we get these headlines of data hacks and that, the market overreacts to the downside. They sell the stock off hard, and when you sort of look through the end result, the data release or the data hack has generally not been that terrible. So I think it's a good little value play with the stock sitting back around 10.43. So I sort of look at the idea of selling a 10.50 put for August, around about 40 cents a premium. Yield on the stock's around 5.7%, and we've still got a target of $11.35. So certainly see some good upside. If you did get exercise on a 10.50 put in August with 40 cents a premium, obviously a $10 10 entry and a dividend to come. So I think that'd be a pretty attractive opportunity there. Another stock, which I've mentioned it before, and it's one we've been looking at, is QBE. Still looks pretty attractive to sell calls with the stock. Anytime it's trading over $25, I think writing a covered call, if you are still long the stock, represents pretty good value. As a quick guide, the August 2550s are offering around 65 cents a premium. That's with the stock just under $25. So if we did get a push up over 25, you might be able to get sort of 70 or 80 cents writing that call. So definitely for anyone who is long QBE still, I think writing some covered calls is a great play, supplementing the dividend, but also just giving yourself a bit of downside cover because it does look a little bit stretched.
Yeah, that dividend's really starting to not be overly attractive at these sorts of levels. So the cover call bring in a bit of extra income.
Yeah, look, I think it's a really smart play. I've had a couple of clients do it. A couple of guys actually let a bit of stock go, which I'm not unhappy about because I think there'll be a chance to buy it back at a later date or move into something else with a slightly better yield. The final one I thought I'd just talk about was Wesfarmers. It's had a huge run after really struggling for the early part of the, from sort of March through to May. It was really in the doldrums, sort of pushed its way back up and sort of well into the 90s at the moment. Just came back under 90 yesterday, but got up to around $92 in the last couple of weeks. I think it's very overpriced. We've got a target of sub $80 as our research target. So either selling covered calls there if you are someone who is long the stock would be a good move, or realistically, probably taking profits on the stock, I think would be probably a smarter move. Really, we could see the stock back at $85 or lower. So if you are long Wesfarmers, definitely consider whether it's time to take some profits in the physical.
Yeah, you only need to look at that chart there and see how volatile it's been. If you do anything option related, you're probably going to get rewarded fairly well for it. So good one to look at. It's also been a pretty handy one to trade. So nice one.
Yeah, definitely. And with the run that you've seen there, if you did sort of feel there was the downside we're seeing with the target, even buying some puts for a move, there's $5 or $6 of hot air that could come out of the stock. So buying a put if you wanted to speculate on its move could be a good trade also.
Yep, I like it.
Right, mate. Well, that's probably our list for this week. Let's hopefully the market has a good day today, and we keep seeing these resources push back up.
Will be nice. Thanks, mate. See ya.
Thanks, mate. Cheers, mate.
Bye.
All good.